All right, welcome. Today, we are going to build a complete actionable trading plan for NVIDIA, and we're going to do it step by step. Our goal here is to give you a crystal clear roadmap so you can navigate what's happening in the market right now. Let's get started. So, if you've been watching the market, you know it's kind of at a standstill, right? Pretty much everyone is sitting on the sidelines, just waiting. But this quiet period, well, it's actually a fantastic learning opportunity for us. So what's our plan in an environment like this? How do we get ready to act when the time is right? The market is holding its breath for one big reason: the Federal Reserve's interest rate decision. This is what we call a binary event. It could send the market flying in one direction or the other. And that potential for a huge, sudden move is exactly why having a solid plan before it happens is so important. And that's what we're here to build today. Now, in this tricky market, we're going to focus our study on NVDA. It's a leader, a stock a lot of people are watching, and right now, even with some negative headlines floating around, it's showing some really interesting underlying strength. We're going to break down exactly why that is and how you can build a practice trading plan around what it's doing right now. Okay, this right here highlights a super important concept. Look at this. On one hand, you have bad news, headlines about some investigation in China. Normally, you'd think the stock would sell off, right? But look at what's actually happening. NVDA is refusing to drop. It's just hanging out, holding this key $180 level. When a stock doesn't fall on bad news, that's a powerful signal. It tells you that strong buyers are in there, supporting the price, and that makes it a really interesting candidate for our plan. So what we're seeing on the chart has a name. It's a classic pattern called a bullish consolidation. The absolute best way to think about this is like a coiled spring. See how after that big move up, the stock is just moving sideways? It's taking a break. It's building up potential energy for its next move. This is a very healthy sign, and it gives us the perfect chance to build our plan. All right, now we get to the really important part of this lesson, your step-by-step game plan. We're going to go from theory to actual practice. We're mapping out the exact numbers and the exact levels you need to be watching so you have a complete strategy ready to go. Before we ever think about where to get in on a virtual trade, we always define our risk first. So our entire plan is going to be built on one key level. We're going to call it our safety valve. This is the absolute foundation of our whole strategy. Here it is. This is the most critical number for our entire plan. $175. 175. This is our safety valve. It is the absolute floor for our bullish idea. You got to remember this number because everything else we do is built right on top of it. So why this number specifically? Well, imagine the price action is happening inside a box. This level, $175, is the bottom of that box. It's the floor. If the price were to close below this level on a daily chart, our bullish idea is broken. Our whole plan only works if the stock stays above this key support, above our safety valve. Okay, so we've got our 175 safety valve locked in as our foundation. Now we can build the rest of the plan. Let's start by looking at where you could potentially practice an entry for this trading simulation. We've got two different paths for virtual entry here. The first one is the conservative approach. For this, you would wait for a confirmed bounce right off the support level at $180. That's 180. The second option is a breakout strategy. Here, you would only enter if the price powerfully breaks through that $187 resistance. So two different styles, but both are anchored to our main plan. So we have our entry plan. But what if we're wrong? A professional plan always includes an exit strategy for when the idea doesn't work out. If our safety valve breaks, we need to know exactly where our plan is invalidated. And here's that number. Our invalidation point is $170. 170. If the price closes below this level, our bullish idea is no longer valid. That's it. This isn't an emotional decision we make in the moment. It's a rule we set before we even think about getting in. And here it is, the whole plan, all in one place. Let's walk through it one more time. Step 1, everything, and I mean everything, is anchored to our 175 safety valve. Step 2, we watch for a virtual entry, either the conservative bounce or the breakout. Step 3, our invalidation point, our hard stop, is set below 170. And finally, steps 4 and 5, we note our educational targets at 195 and 205.
So, we've built a solid educational plan based on what the chart is telling us. But now we have to connect it back to the real world. We have to talk about that big risk event we mentioned at the start, the FOMC announcement. This is a crucial final step.
Look, I really can't overstate this. The FOMC announcement can cause wild, unpredictable price swings that can just blow right through any technical level. So this plan we built is only valid if the news doesn't create some huge market shock. For this learning exercise, the professional way to approach this is to practice with a much smaller virtual position size, or, even better, just to wait until the dust settles after the announcement is over.
And that brings us to our final and most important point. Please understand this. This entire analysis is strictly for training and educational simulation only. It is not financial advice. We are not responsible for any trade decisions you make. The goal of this whole lesson was to teach you a professional process for building a plan. The goal was to learn. Thank you so much for your focus today.